Good morning, this is Velenski with Driving Markets. So China's economy is sinking. It's going to go into deflation. Not only that, its stock market has lost 25% in the last 2 years. Foreign investors are withdrawing. Lack of foreign investment going into China. Its manufacturing is down. Youth unemployment is up. Its stock market is in so much trouble that there's now going to be households are going to be looking to lose an absolute fortune, and overall it's lost its direction. Why is that important? In addition to that, I forgot to mention its property sector is also down in the dumps. So China, being the number 2 economy, was essential to the global welfare of growth in Western economies. But now that has been withdrawn and has failed, what you're going to have is America, Europe and the UK and other Western countries feeling the effect of the downturn in China. So China in 2008 saved the West. Now its property sector is completely in disarray. What essentially you have is that foreign investors that have invested in Beijing and in Chinese super towers are losing money. Banks are going bust. There was a shadow bank just went bust 2 weeks ago in China, and that is going to continue with the financial sector under huge pressure. Moving on to what impact that's going to have on the West, it's quite simple. With China not taking in all the excess supply in the West is going to end up with a customer or a client that's not going to be buying any more goods. As a result of a downturn in economic activity in China, then the US, Europe, UK, Canada, Australia, which are partners with China and do business, would see a downturn in their particular enterprise and their particular business activity and volume. So volumes overall will fall, leading on to a global downturn, global slowdown, which we're going into in 2024, and potentially an official global recession. We're already in an unofficial global recession, but going into an official global recession as a result of the number 2 economy sinking. Deflation in China is real, and deflation in the US, or even stagflation with rising prices and no growth, could be the case as the Fed and the US Treasury and the Biden administration are completely confused with what to do with the US economy being the number 1 economy. How does that bear out in relation to investments and stocks, where you will see a downturn under normal circumstances if there wasn't for the manipulation of the Fed and the US Treasury with the collusion with Wall Street in trying to build up values of stocks. But cracks are appearing within the Dow and the Nasdaq and the S&P. So you will see a fall, the fall of between 14 and 20% initially, and then by June, July, there'll be another 15%. So overall, looking at about a 35% fall in stock markets in the US, which will obviously have a ripple effect across Europe, Canada, and obviously in the UK. Inflation is trending up, which is another concern as far as the central banks are looking at. It's going to be something that is going to put pressure on the central banks what to do with interest rates. Inflation will rise. Interest rates may not come down as fast as possible or as fast as predicted. So you could end up with a situation with higher interest rates or higher interest rates for a longer period of time. This is Velenski with Driving Markets. You can share, subscribe, comment. Catch you later.